No, sir.
We don't have any option to bargain. Whenever we are coming to roadside vendors, those are very needy people, we bargain with them. But whenever we are going to shopping malls, they are crore-patis. But we whatever they mention, we just pay and come out with that from that, and we see their prestige. But wherever it is required, we are bargaining too much. So now onwards, from the roadside vendor, at least don't bargain very harshly because they are needy people. So whenever we are going to shopping mall, whatever shopping mall has mentioned price, that 200 or 250, we are paying that. Okay, this is this is called market. We are buying at market price, otherwise known as market order. Got it? Otherwise known as market order. I am not going to. So people are joining so far also now. So do you wait for some time?
Sir, I guess we can continue because it's already 20 minutes since the scheduled time for the lecture.
Yes. Yeah. So so this is called market order. Okay. Now if I will say this market order in stock market, if I am going to see, suppose say, uh, go to see you can go to NSE website and what happened? Okay, you can go to see the live market, see, but you can also see freely here in NSE website. Go to live market equity stock. So you will come to this current market price or the last traded price. Now Nifty is 16,837. Then Hindalco is 451. So this is, if I am going to buy Hindalco, then I will pay 451.70. I don't have any bargaining power, or I can't bargain. I will not bargain. Then when I am not bargaining, then this is called market order. All of you are clear? What is market order?
Yes, sir.
I
Yes,
am
sir.
buying on market. Okay. Then if I'll say I want to buy Titan. Titan is now 1857.95. So 1857.95. This is Titan. You want to buy Titan, but you don't want to buy at 1857. So Neil now comes to roadside vendor, and Neil will start bargaining with them. When we bargain with them, I'll say as a buyer, I want this price to come down, or it has to go up. Which one?
Come down.
Sir, come down.
It should come down. That means as a buyer, I want to buy always lower than the market price. Okay. So how much you want to pay? How much you will bargain? Neil?
Sir, I don't know how much to bargain, sir. Like how much ever is possible.
So you just guess and tell how much you will give. I'll tell you the logic then. Yes, Rahul.
So we would like to bargain till we reach the fair value of the asset. So whatever is the fair value according to our consideration, we would want to bargain up till that level.
Okay, that is one. Okay. So you can say how much you will pay. And again, if you see these prices are going up, that means demand is there. 35 rupees today is up. Okay, today it is up by 35 rupees. That means it's in bullish trend. If you see, almost all are in bullish trend except these three. This five stocks. Okay. Just see, if you want to buy at you bargain and buy, how much you will pay? Any number you can say.
Sir, around 1500.
Yes, 7.
1500, sir.
1500. Okay. Anyone? Anyone with other
At 1850, you'll be able to get it. 7
yes,
rupees, the exchange will allow you.
18?
At 1850, you'll be able to place the order. Like Diksha said, 1500 would be even better, but the exchange will not let us place that order itself.
No, exchange will allow. We have something called DPR low, day price range low, DPR low and DPR high. This is day price range high and low. So this around 50, 60 rupees, 100 rupees less you can place. Sometimes it is more than 100 rupees also based on price fluctuation. DPR high in the higher side you can place maximum that much. DPR low you can say minimum that much. So 1850 or 1500. If suppose exchange also allows you, but here if you are punching when market price is 1857, you are punching to buy at say 1500, then if market price will not reach to your price, what will happen?
Sir, no trade.
No trade. Order will get cancelled. Okay. uh, if order is getting cancelled, so you want to buy, then you are not able to buy. This is called execution risk. What is this execution risk? You have set some price, market price is not reaching to that, your trade is not getting executed, so your trade is getting cancelled. If you are giving very high difference between your limit buy price and the market price, then you will come out with the execution risk. All of you are clear? Suppose this you are bargaining with the Apple seller and he is not bringing down. You want to pay 220, but he is not ready to sell you at 220. He is saying at least you pay me 240. Then you are coming out. I don't want to buy from you. I will go to other seller. So your trade is not happening with that particular seller because that seller is not reaching to your price. So all of you are clear what is execution risk? Should I repeat?
Yes, sir. It's clear.
Okay. Now, in market, we come out with two types of risk. One is price risk, another is execution risk. Okay, we'll talk about these two types of risk. First, this buy limit. Buyer always wants to place lower price than the market price. This limit order. Market price. Seller will place lower price than the market price or higher price.
Higher, sir.
Seller will place higher price than the market price. Okay, so this is called buy limit price, sell limit price, or buy limit order. You can say buy limit order, sell limit order. Now another part is coming is price risk. So if your price is not reaching to that level, then execution risk arises. Then when you are dealing with a market order, you will bear this price risk, because once you buy it at 200 rupees, suddenly maybe price will fall, and the moment you see that it is 200 rupees, and the moment you punch that order, it takes little time, fraction of time. It's not second also, if it takes nanoseconds, but still the price moves very faster way. You may come out with 202, 204 when you are buying. So this fluctuation happens very quickly. Okay, in the in the market you will see this fluctuation happens very quickly. So those who have seen the live market with a broker's account or from the news channel also, you have seen like this changes very frequently. So price risk arises when we are placing market order. Execution risk arises when we are placing limit order. So then if we don't want to take, are we ready to take some risk? Are we ready to take some risk?
Sorry, sir, can you repeat yourself?
Are we ready to take some risk? Whether we are ready to take some risk or not,
Yes, sir. That's why we are here.
Yes, sir.
we have to take some risk. That's why we participate in the market. Okay, so whatever the way you go, you have to bear some amount of risk. That is, market order is simply you buy at market price. Limit order is you buy it the lower price if you are a buyer, lower price than the market price, and if you are a seller, then higher price than the market price. All of you got it?
Yes, sir.
Ali?
Yes, sir. Yes, got it.
Yeah. Now we are coming to stop loss order. What is this stop loss order? Simply say, I am bullish about, suppose say, SBI. I got a good news for SBI. I am bullish about SBI. I have bought at 420. Sorry, my power got off. Like Wi-Fi has gone. Okay. Okay. So whenever I'm saying my target is 424, I have bought at 420. I want to sell at 424, and after some time it starts coming down. Then what will happen?
So you suffer a loss. Okay.
I have
Theoretical
to
loss.
bear the loss. So you can draw a line. You can draw one line. So above this is my profit area, profit region. This is my loss region. Okay. Now if price enters to this region, I will come out with losses. If I am in intraday, I have to bear the I am bound to square of the position, so I have to bear that loss. Yes or no? If it reaches to 400 or 380 or say 370 or 350, I will come out with huge losses. For 420, 380 or 400, minus 20, minus 40, minus 50, then minus 70 rupees. Okay. So if I am bound to sell at the end of the day, before end of the day, I have to bear this loss or risk, then how to deal with? I have to do something to stop my loss. I don't want to bear 70 rupees loss or 50 rupees loss or 40 rupees loss or 20 rupees loss. My loss bearing capacity is 2 rupees. So I can bear 2 rupees or 3 rupees or 5 rupees per share. So on that sense, I can set the stop loss. I will stop my loss somewhere as per my risk bearing capacity. Got it? Am I audible to all of you?
Yes, sir. Yes, you're audible. We
Yeah.
understood.
Yeah. So so I'll stop somewhere my loss. Now if I will say market price is 420, this is the current market price, or 422, my stop loss price I will say 398, 2 rupees, 2 rupees I want to bear loss. Then what will happen to my order? Suppose all are selling potato at 20 rupees, you are selling potato at 18 rupees, you are a seller. What will happen to your order, your potato? You are a seller, in the
Would be
market
sold, sir.
price is 20 rupees, you are selling cheaper than the market price. Then what will happen?
It will be sold.
Yes?
No problems would arise. It would be sold.
So it will all will come to buy from you. Okay.
Yes.
So here also your order will immediately get squared off. Yes or no?
Yes, sir.
But after 420, if it will go off, then you will lose. So when market price is 420, you are saying you want to sell at lesser price, or cheaper price than the market price, then your order will get executed. So we don't want to square off our position when market price is at 420. We want to square off our position, or we want to sell when it will come down to 398. So if it is not coming down to 398, we don't want to sell. Now if I will place this order to market, it will be visible to all. Then anyone can come and buy. You can see one price we'll see over here in live market. Suppose say I'll see SBIN. So current price is 415. Now see buy price and sell price. Have I shown you this in the last class?
No, sir.
Okay, so this is the order book live market you are seeing. So SBI equity. For SBI equity, you are seeing the live market, how much trade has happened, trading volume so far from 9:15 to now. It's not 1 hour also. From 9:15 to till now, 25 lakhs 80,000 shares has been traded in the SBI itself. That means how demandable this SBI is. See, traded value is 10,705 lakhs. Trade has happened in terms of value. And if you see, this is order book. Okay, these are so many orders are lined up. And in market, we can see 5 best buy orders and 5 best sell orders. Please spend some time to see how prices has been arranged and why it has been arranged. Two things you need to ask: this buy price, sell price, how it has been arranged and why it has been arranged. I'll just share also with you this link. Okay, so just spend 1 minute time to understand how it is arranged, how this total quantity is coming, and why it is arranged. Okay. So take 1 minute time only. So all of you got it? How it is being arranged? All of you got it? Buy price is arranged from highest to lowest or lowest to highest?
Highest to lowest, sir.
And sell price?
Lowest to highest.
Lowest to highest. Why?
So because the buyers always, like, to give the maximum benefit to the buyers, likewise for the sellers. So the seller would like to have the highest price possible. And the difference of them is what we call the spread in the market.
Yes. So difference between bid and ask is called as spread, or we call it as bid ask spread. But these are willing buyers, these are willing sellers. Now willing buyers are punching their prices, willing sellers are punching their prices. Based on that, we are just deciding, or trade is happening. Suppose say I want to buy potato, I am going to different sellers and asking the seller's price. Suppose someone said he will, someone said like market price is 20 rupees, he will pay me at 20, someone says 22, someone says 18, someone says 25, someone says 23. So I am a buyer, okay, and these are seller's price. How I will arrange? How I will arrange this? I will arrange from lowest to highest. 18, 20, 22, 23, 25. Yes or no? Now I will buy from whom? Who is paying me? Who is charging me less?
The guy who's selling is 18.
18 rupees. So what I am arranging this buyer's price is from lowest to highest. Buyers are arranging the seller's price from lowest to highest. That means seller price in this market is arranged on behalf of buyer. So when buyer will come to buy, buyer will buy from the seller who is selling at lowest price. Okay, clear?
So there's one question,
Yes.
bit off topic, but
Yes.
over here, this share for SBI, it's actually up by 0.75%, right? Okay, now if you see the total number of buy quantity is less than the number of sell quantity, almost half of it, if you can say,
Yes.
a little less than half. So logically, forces of demand and supply would dictate that the price should go down, right? To reach equilibrium. Then why is the stock price up? You getting my question, sir?
Yes, yes. Very good question. See, these are willing buyers lined up and willing sellers lined up. And so far, just see how much the trade has happened. So far, whatever happened, they have pushed this price up. Okay. Now, whatever is lined up, it may happen after 1 hour, which double sell is means more selling, more sellers are waiting to sell, and less buyers are there, right? Means half of the buyers are there. So it may happen after some time, this price may come down, but this price has gone up because of this 25 lakhs, not because of this 9 lakhs, 17 lakhs. Are you getting, Ali?
But sir, in that case, everybody can predict that the price will go down in the coming hour or in the coming day, right?
Yeah. Another thing is, whenever we have placed orders, we have one option called modifying the order. Okay, we can modify the order if it is not traded. These sellers, those who are lined up, if they see there is a upper moment or there is a good news for this, they will again modify their order, or they will not sell, they will hold now, they will hold back, they will wait for some other days to sell. So they can immediately modify this. It is not like that all those who have placed order, sell order, wants to buy immediately or they will buy. Their order, the price may not reach to their price. That is one thing. Second thing is they can also modify their orders. So predicting based on this buy quantity, sell quantity is a base prediction. It's not a concrete prediction because any time seller can change its demand, quantity demand. Buyers can also change its quantity demand. Buyers can also increase immediately. You see that 9 lakh, 7, 8 lakh becomes 10 lakh now, 10 lakh 53,000. Yeah. So,
Okay, and so one more question.
yes.
So so all these orders that are in this table right now, these are all the limit orders on the exchange, right? Market orders
Yes.
do not show in this table.
Market order is this market price only.
No. So I'm saying, so like all these 5 orders that are on the table right now, these are the closest matched limit orders in the market, right?
Yes.
So basically, if any order were to be executed now, it would be at 416.70.
Yes.
Which is the lowest price possible.
Yes.
Okay, sure.
Yeah. So now this buy price is arranged from highest to lowest on behalf of seller. Okay. Suppose you want to sell, you hold some share or you want to sell your flat. So market price is 50 lakh. So you will collect buyer's prices. Who will pay to you how much? Suppose say one says 55, 52 lakh, then 50 lakhs, then 48 lakhs. So you are arranging from highest to lowest. These are buyer's price, but you are a seller. Okay, got it? Buyer's price is arranged from highest to lowest on behalf of seller. Seller will sell to whom? 55 lakhs or 48 lakhs?
55, sir.
55.
55. The same thing happens in the market. We are seeing like these are from highest to lowest. And when these two get merged, buy price, sell price get merged, then only trade happens. Okay. And these are the these are quantities. 5 best buy order, sell order we are able to see, but there are many orders that are lined up in the market. The total quantity here is total quantity that has been ordered for buy side, and this total quantity is for sell side. This is called central limit order book. So this order book is called central limit order book. All of you are clear about this?
Sir, one question.
Yes.
Sir, the last line where the stock price is for buy price is 416.5 and sell price is 416.95. So there is a difference. So will the trade take place or not because the price
No.
is not matching?
No, trade will not take place in any of these because
Okay.
prices are not matching. We'll do one exercise called price time priority. This price time priority will do one exercise. Okay. So,
So, sir, what will happen? Will both the buyers and seller wait for the price to match, or the trade will not happen in these 5?
if it will match, then only trade will happen. If one market order will come, suppose someone want to sell at market, what price it will sell?
So 416.70.
Yes. So if one market order will come, this will get traded, or these two should get matched, then only trade will happen.
Okay, okay.
Yeah. Okay. Now, yes, why I was saying, if I want to sell when market price is 416, I want to, I have two targets. I have bought this. Suppose this 416, this is my loss region, this is my profit region. Yeah. I want to, my target was, I have bought it, my target was 420, so that 4 rupees profit I can get. This is my limit sell price. At the lower end or at the loss end, I have point like 412 is my limit sell, stop loss sell price. Okay, stop loss price. If I am punching 412, where it will appear? Can anyone say? In the market?
Sir, it will not show on this table right now
Why?
because it's not amongst the top 5 orders in the market right now. If the once the price moves in your direction, then your order will be visible maybe.
See, the lowest price will be visible in the sell side.
But you're buying, no, sir?
No, you are selling now. You have
Acha,
bought
oh,
it.
okay,
You
okay,
have
sure.
bought it at 416. You will sell here.
Yeah, yeah, okay. In that case, sir, you'll be on top.
Top, then the buyer who is ready to buy at 416 will ready to buy at 412.
Correct, yes, sir.
So what is the meaning of then punching stop loss order? When market price is at 416, you are coming out by punching 412, then trade will happen at 416. Then why you are punching stop loss order? And why you are participating in the market? You will bear the transaction cost. Okay. So that's why in stop loss, those who are in market, you have heard something called trigger price. Okay, we call it as trigger price. We lock our order. We lock this 412. It will not be visible to the market. The lock we lock through trigger price. Okay, so trigger price will ensure that my order will not visible to the market unless it trigger to my trigger price. That means if 412 is my stop loss price, I'll say 412.25 is my trigger price. Okay. Now I have punched this order, but it will not visible to the market. It will not appear here because market will not come to know that there is a order. Market will come to know when market price will hit to 412.25 or my trigger price. Then it will trigger to the market. Then anyone can see. Now the benefit is, what is the benefit if I am locking my order?
Sir, your downside is controlled.
Yes. So my benefit is I am controlling my downside. Second is I am not allowing market to square off my position. I am not allowing to market to square off my position when market price is 416. I only want to square up my position when market price comes down. All of you are getting clear? What is the benefit of trigger price? We'll take one example. This 416 is my buy price. 420 is my sell limit. 413 or 412 is my stop loss price. Okay. Now say what will be my trigger price? Trigger price should be closer to the stop loss price because first price will reach to trigger price. Then it will be visible to the market or stop loss price will be activated. Can anyone say what will be my trigger price? This is my stop loss price.
413.5 or 2.5.
413.5 or 0.25. Okay. So here it will be my trigger price. Now price will reach to trigger price. Then it will hit to stop loss price. All of you are clear?
Sir, is there any harm if we put the trigger price equal to the stop loss price?
Yeah. So this is called stop loss limit. The one you are saying it's called a stop loss market. Okay. There are two stop loss. In broker firm, you will see SLL, SLM. Stop loss market. In stop loss market, we only give trigger price. So trigger price you give 413.5 and stop loss price you keep 0. In this sense, what is the difference between these two? Can anyone say? These two and when we are saying stop loss price and trigger price 413.5. What is difference between these two? 0, 413.5. Any difference? Any difference?
Sir, I have a question actually on this.
Yes.
So this trigger price, so once I hit that trigger price, my order will be sent to the exchange, right?
Hmm.
But suppose, what if my order does not get executed? Like in your example, if my trigger was 413.5
Hmm.
and my stop loss is at 413,
Hmm.
but like you said, first priority is given to price and then to the timing, right?
Yes.
So what if for some reason, basically when the price is at 413,
Hmm.
because I was late, because my order was sent late, it did not get executed, and now the price becomes 412. Will it still execute?
No. If it is the stop loss limit, then it will not execute. If it is stop loss market, then it will execute.
Okay, sure, sir.
In stop loss limit, just think about the risk. In limit, I have to take the execution risk. Yes or no? Whenever I am punching limit order, I am taking execution risk. When I am punching the market order, I am taking the price risk. Are you getting clear? Now, here this stop loss limit, whenever I am saying stop loss price and trigger price, this is called stop loss limit. I have to bear that execution risk. Who will guarantee that after 414 or 413.6, it may go to 412.99? Then my order will not get executed. Okay. In that sense, if I will say after my trigger got hitted, whatever best available price will be there, next best available price, my order will get executed at that price, then that is called stop loss market. So stop loss market is better than stop loss limit. All of you are getting? why stop loss market is better than stop loss limit?
Yes, sir.
In stop loss market, you will bear the price risk, yes, but the execution risk is more than price risk. If your order will not get executed, then what is the problem? Price may slip to any point 407, 400. So at the end of the day, you are bound to square it up, and you don't have any control about these prices, market prices. It is like market price is getting changed because of market forces. Okay. All of you are clear about stop loss limit and stop loss market and trigger price? Yes or no? Should we repeat? Should we take one more example? कुछ तो बोलो. So take IRCTC. IRCTC is 2687 now. Am I audible?
Yes, sir. Yes.
Yes. Please respond something, then only we'll go out again. Sometimes network may disrupt. 2687 is IRCTC price. IRCTC is not having 2687, not having any competitor. It is the king in the ticket booking, railway ticket booking part, and now people will start traveling. They have started traveling. Prices has gone up. So if I have bought at 2687, what will be my target? Target means my limit sell. I have bought, so to sell at some price. What will be my target?
2700, so for example.
28.
Okay, 2800. 2800. Okay, sir.
2800. Okay. 2800. Okay. Now what will be my stop loss? So always whenever you take a trade, just draw the line. All of you are from economics. You can understand better through diagram. So this is your loss. This is your profit. Whenever you are a buyer, you have bought it. So if it reaches to your, you can set at a time, you can set your profit side, limit, sell, and your loss side, stop loss, sell. Okay. Now what will be your stop loss?
Sir, 2670.
2670. Yes. 2670. So how much you are ready to lose per share if you are keeping 2670?
17 rupees per share.
17 rupees per share. So practically don't keep that much stop loss. 17 rupees also. It depends on several factors how to set stop loss. Okay, 17 rupees you are giving. What will be your trigger price?
2670.5.
2670. Yeah.
0.5.
2671 or 2670.5. Okay. Got it? Now you got it. So this is called stop loss limit or stop loss market. This type of price setting is stop loss limit or stop loss market.
Stop loss limit.
So limit.
Yes, stop loss limit. So we have given stop loss say limit price and trigger price, stop loss SLL. If we want to give stop loss market, then what we will give? Only trigger price, no stop loss price. At stop loss price we will say 0. All of you are clear? This is
Sir,
to
Sir, to summarize, a stop
Yeah.
loss market order will only have a trigger, where uske baad it can sell at whatever price. But a stop loss limit price will only sell up to a certain price. Is
Yes.
that the difference? Because I'm a bit
Yes, that
confused.
is the difference. That is the difference.
Okay, sure, sir.
Beyond that, beyond that, sell will not happen because you have set your limit 2670. It will not sell at 2669.
So, sir, in stop loss market, if the price goes below the trigger price, will our trade happen or not? I mean, will the position square off or not?
Come again, come again.
Sir, my question is, in stop loss market, if the price goes below our trigger price, will our position be squared off or not?
Yeah, stop loss market is for that only. If it is going beyond my 2670.5, it will trade at whatever best available price is there. So that's how I will not have execution risk in case of market, stop loss market. But I will have execution risk when I am coming to stop loss limit. Because when I am setting limit price at 2670, beyond this it will not get traded. Okay.
So, but then the stop loss market is not good for us because in that case we'll be facing a greater loss.
Okay. You say in stop loss limit, if after it has hit at 2670, that is your trigger price, and your stop loss price is 2670, then trade will happen at what price?
2670 because the market reaches there.
No, it may happen in between this or 2670 at in the minimum at 2670. Okay. So
Yes.
because the person who is ready to sell at 2670 is also ready to sell at 2670.5, 0.4, 0.3, 0.2. Okay. That is how stop loss limit works. Now, if it will not get traded at there will be no trade from 2670.5 to 2670. It will slip. Now price will move, come down, come down. Now you have that position open. You will come out with huge losses at the end of the day. It may reach 2650. It may reach 2640 also. Okay, then you are bound to square off in intraday. You are coming out with less loss or more loss,
It's a greater loss.
greater loss.
Yes, sir.
Now, in case of stop loss market, this type of situation will not arise. Like it will slip to this position. Whatever best available is, it will square off my position. Whatever best available price is there in the market. Clear?
Oh, sir, I thought in stop loss limit, if the price reaches below our stop loss, we'll just exit from the market. It's not like that.
Not like that. Yeah, it is not like that. So
And similar in stop loss market also, if it reaches like below our trigger price, we will not exit the market. It will serve us the best deal there.
no, no. See, if it is going below to trigger price in stop loss market, then our trade may happen at best available price in the market. 2670.5 is my trigger price. The next best may come 2670, may come 2650, or sorry, 2669 or 2668.
But it
It
will
may
not go
come.
below 2670, right?
It will go below. This is my trigger price. This is not my limit price. It is,
That's I'm saying it will not go below our stop loss price. That is 2670.
no, I am not keeping my stop loss price in this case. I am keeping my
Okay.
stop loss price as 0. That means I'm allowing market to trade at best available price next to my trigger price.
Okay, got it, sir.
Yeah.
And if for example we keep our price let's say 0.5, then I mean
Point five.
in stop loss market here we are keeping price 0 if we keep anything
Okay,
except.
then that is stop loss limit. So in this sense, we have kept like 2670.5 is trigger price, then 2670 is stop loss price, then this is called SLL, stop loss limit.
Okay, sir.
It,
Got it.
it will happen that in between this trade will happen. It may happen at this or in between, but not beyond this. The person who is ready to sell at 2670 is ready to sell at 2671, but not at 2669. He will not ready to sell at lower than his limit price. Got it?
Yes, sir.
Okay. Now the example that we have seen is was the buy price. Whenever we have bought, we were punching the stop loss price for sell. Okay. Now we'll see whenever we do short sell. Whenever we do short sell, how we'll punch the stop loss price. Then we have to punch stop loss price for buy. Yes or no? If we have sold, suppose say, let us take another stock, say Britannia. Britannia is also the king in biscuit industry. It shares more than 40% of total biscuit consumptions in biscuit industry. So 3940 is current market price, 3940, and I'm seeing like it has come down and little bit more sellers are there. They are bringing down these prices. Now what we'll do, I'll just short it. I'm expecting further it will go down. Sorry, not up. I'll just short it. So I'll sort it. Then once I sort it, at suppose say 3940, I have sold it. Sell at 3940. Then what will be my profit region? If it will go up, I'll earn profit, or if it will come down, I'll earn profit.
Come down.
If it comes down, okay, because I want to buy, always buyer wants to buy at lower price, seller wants to sell at higher price. If it comes down to 3935, then 5 rupees profit I will come. So whenever I do short, my profit region is this below. This is my profit. It is just reverse from buy, and this is my loss. If I will buy at higher price, suppose say 3945, then 5 rupees loss I will come out. Okay, if I am say buying 3950, then 10 rupees loss I will come out. How I will set my stop loss in this case?
Above the selling price, above 3940.
Above 3940. Can anyone say what will be my stop loss price? If I am punching stop loss limit, I have to give stop loss price as well as trigger price. So what will be my stop loss price? What will be my trigger price?
So your stop loss will be above 3950 or your purchasing price. I'm guessing, yeah, 3950, you can say it's your stop loss.
39?
3950 can be your stop loss limit and 45 can be your trigger price. Because you
No,
bought in at
550.
3940, right?
Yeah. You
Yeah,
have
so you will
sold at
place your trigger
3940.
above your price because you're short selling.
Yeah. So how much above? So 10 rupees you are ready to lose per share?
So that depends on the investor, what what they are comfortable with. But yeah,
Yeah.
45, anything above 40 can be your trigger.
Yeah. So now give one example. What will be stop loss price and what will be trigger price?
Sir, in this example, we can keep the trigger at 45 and the
Mhm.
stop loss at 50.
Okay, you are saying no, don't give 5 rupees difference between trigger price and stop loss price. Okay.
Okay, so 4,000 can
3950,
be your stop loss.
3949 or 3949.5 you can give your trigger price. Okay.
Acha, okay.
So if you are giving 5 rupees difference, the problem is whenever it will get activated to market, it may end up with 3945 only. It may square off our position at 3945 because it will square off in between 3945 and 3950. Okay, so I am setting trigger price and stop loss price above my sell price in case of short selling. All of you are clear? If I want to take stop loss market, then I want to place stop loss market. This is stop loss limit. I want to place stop loss market. So in stop loss market, what we are giving, stop loss price is 0 and trigger price is whatever 3949.5. Okay, so this is stop loss market. Clear or not? Clear? No. Let us take one more example. Suppose my sell price is 300 rupees. My target and trigger are two different things. Target is 280 rupees. So 20 rupees was my profit. This is called limit buy. In the stop loss or in the downside, in the loss side, I'll say my stop loss is 304. 4 rupees I am ready to lose. Then my trigger price is lower than my stop loss price in this case or higher than?
Lower.
Because the price is coming from down to up. It is going from down to up. In case of buy, it was coming from up to down. Okay, so this will be 30, 3.5 or 25. Clear? Now I'll say stop loss market, then I'll keep this trigger price only 303.5 and my stop loss price I'll keep 0. Okay, all of you are clear up to this? Yes or no? I don't see any response from all of you.
Yes.
Please raise your hand, those who are clear, quickly, or write down in the chat box yes, yes. I hope you have not slept or yeah. Rahul Giri, Rahul Ghosh, clear. Muskan, Saranya. Okay. Only 2, 3 are clear, not all. 4, 5, 6, 7, 8. What about others? Okay, take one more example. Suppose you have sold it. Suppose, yes, 2 example. You have sold at 9 rupees. Okay, you have sold at 9 rupees. Your target was 8 rupee. So, what will be your stop loss? Stop loss?
Maybe
So
11, sir.
9.9 and 10.
10
Yeah,
rupee
or 11 also.
or 11 also.
10 or
And
11.
what
Yeah,
will be
correct.
your trigger price?
Around 9, sir.
9.75 you keep.
Okay.
Okay, it is coming from down to go up. So this is how we are setting our stop loss. If I will keep this stop loss price as 0, trigger price as 9.75, then that will become stop loss market. Okay, we'll do 2 exam of yours. Now if I have bought it, my buy price is, say, take the real price now. So LNT you have bought at 1673. Okay, LNT 1673. You have set your target or limit sell. Target sell was 1680. Now you say what will be your stop loss price and trigger price. Stop loss price and trigger price. You have bought it. Now you are punching to the stop loss to sell. What will be your stop loss price and trigger price?
So 1670 can be a spot loss price.
1670.
70.
Yes. Now trigger price
1678.
how it will be 78.
Okay. 1674.
We have
Your
to
buy
keep it
price
near
is
the 1670 now.
it's 1670.5 or 25 you can give. Your buy price is 1673. If
Okay, sir.
if it will go up to 1680 or 79, you are in profit zone. You want to put stop loss when you are in loss zone. Okay. Second, sell. Sell say one second give. You just go through this. I'll just come back. One second. Okay. Say you want to sell say Infosys 1708. Okay, sell Infosys 1708. Now you say what will be your target? Target means limit by, what will be your limit by? Are you getting?
1690.
Yes.
90.
1690. Okay, 1690 is your limit buy. Now what will be your stop loss price?
1715.
1715. What will be your trigger price?
14.75 or 5.
1714.5. All of you are clear about setting stop loss in the both the sides, buy side, sell side? Yes or no? If you want to repeat, just ask me, or else we will move forward. All of you are clear?
Yes, sir.
Okay.
Yes, sir.
Now we will move to orders that are there in the market based on time condition. We have seen the based on price condition. We will move to based on time condition, then quantity condition. Now based on time condition, we have something called IOC, that is called immediate or cancel. What is this immediate or cancel? I have plans to buy 500 quantity of IRCTC. Immediately there was a seller or price got matched with 200 quantity, 200 got traded, and the rest 300 will get cancelled automatically. because it's immediate or cancel. Clear? Yes or no?
So can you repeat?
Suppose I am willing to buy 2000 quantity of SBI. I have punched order, and at that moment, that tick by tick, it's not second also. That moment, there are sellers to sell me say 800 quantity they are selling. So 800 got traded out of 2000. My order 800 got traded, and rest 1200 will get cancelled automatically. Less 1200 are not got traded. Since it's immediate or cancel, immediately whatever will match will get traded, and rest will get cancelled automatically. Okay, rest will get cancelled automatically. Clear? Clear? कोई तो कुछ बोलो. हाँ ना. Yes. Rahul. Rahul Ghosh. Rahul Goswami.
Yes, sir, it's clear.
Okay. Now, if I will go to day order, this day order will be lined up till 3:30. So from 9:15 to 3:30. In between, if it is not getting hitted, my limit is not reaching, then at 3:30 it will get cancelled. Okay. So based on time, these two are popular. Then other types of orders based on time we will see. Now based on quantity, we have two types of order. One is disclosed quantity and another is non. What do you mean by disclosed quantity? Anyone has heard about this? Anyone has heard about this?
Sir, so basically, when you place a limit order, you're also asked to. So, like, suppose you want to sell 100 shares, but the exchange also gives you an option to disclose less quantity than the actual amount which you want to buy. I'm not sure the reason behind it.
Yes, I'll tell the reason. Gaurav, where are you from? Gaurav,
Yes, sir.
where are you from?
I live in Navi Mumbai.
Navi Mumbai, which place?
Vashi.
Wasi.
Yes.
Wasi, which sector?
29.
Sorry?
29.
29. Okay. Okay, we are reaching to your home today. You are not asking why?
I know this office is in sector 17 only, no? Your office.
No, that was the old one. We have come back to Patal Ganga, one Rasayan area. I stay in the, yeah, it's a 70-acre campus.
Yes.
We have staff quarters. I stay there only.
Okay.
So in Wasi, we don't operate. Now only certification exams are happening. Nothing else.
Okay.
So from 2017, we have moved to here. Okay. So Gaurav has got a job at say Delhi. Now he wants to move from Wasi to Delhi or Navi Mumbai to Delhi. Okay. Now he got, and a nearby office he want to settle down at Delhi. He got a very good job, and he wants to, and he liked Delhi also. Now he got one flat at near about his office at Delhi. Flat cost is 1 crore rupee, and suppose 1.5 crore rupees, and his Wasi flat is 1 crore rupees. Now he wants to, in 7 days he wants to buy that, or else he will not get a flat nearby his office. This is the flat that is available. If he will miss to buy this in 7 days, then what will happen? He has to go travel at least 30-40 kilometers or 50 kilometers per day. because he'll get a flat in not near to his office. It will be so far from his office. So what will happen? He wants to buy that flat in 7 days. He will not face this traffic, or he will not travel. His travel time will save, and it is nearby his office only. He is not having 1.5 crore. If he wants to sell this Wasi flat, those who are from Mumbai, he wants to sell this Wasi flat. Now he will tell in his colleagues or in your class that he wants to urgently sell this Wasi flat. The market rate is 1 crore. How much you will pay? Diksha, how much you will pay?
Sir, 1 crore.
1 crore. Okay. Anyone? Rahul? Ayush? How much you will pay?
1.25 or something like that.
1.25 crore. He needs urgently to sell Wasi flat in 3 to 4 days or 5 days, because he wants to acquire in 7 days. He wants to get that
He
Delhi.
will try to sell it around 1.5, but the market value is 1 crore. So between that,
This is your Wasi flat or Navi Mumbai flat. This is the Delhi flat. Okay, Delhi flat. Now he
Less than
has
1 crore.
yes. Who said?
So it's me, Shubham.
Yes, Subham is a rational buyer. Subham has seen the it's urgency for a seller to sell. If he will give lesser means how much, Subham?
Let's say 80 lakhs, around 80 lakhs.
80 lakhs. Anyone with other codes? I need 5 codes.
Just 75.
75. Anyone wants to modify now your 1 crore, 1.25 crore?
I thought, sir, you were asking about selling that 1.5 crore flat. Sorry, sir. Yeah, then obviously
No.
it would be less
Sir,
than 1 crore.
1.2 crores. That would be rational.
1.2 crore?
Yeah.
So you want to pay higher than the market price?
1.5 crore is the market price, no,
No,
sir?
no. That is
So 1
Delhi
crore.
flat. 1 crore is the market price.
Yeah, in that case, 90 lakhs or 80 lakhs, because the seller has an urgency.
Yes, 90 lakhs or 80 lakhs. No one will ready to pay the market price or higher price than 1 crore. Okay. So why you are punching or you are mentioning lower quotes? Because Gaurav has disclosed his intention to sell this Wasi flat. It's very urgent. He will sell. If he will not disclose his intention to sell this Wasi flat, whether you will punch this type of orders or you will give this type of price, you will not.
no, sir.
Okay. So that is how disclosed quantity is working in the market. If you will disclose fully, you may come out with inferior price. So you don't disclose fully, you disclose some percentage. Okay, how it is working, we'll see. Suppose I want to sell 2 lakh shares. 2 lakh shares. Now, if I will punch this 2 lakh share to sell, then buyers will come down their prices because a huge quantity came. You can see in the market, if you see quantity you see 3, 1, 1, 3, 2, 4. So in total this is 69, but quantity is not that much. It's sometimes in 100 or maximum 1000, not in lakhs. Suppose you want to sell 2 lakh share, and you have given a price that will appear in your top 5. Then what buyers will do? Buyers will bring down their prices because a huge quantity came to market. In that sense, we will exercise this disclosed quantity. By regulation, we can disclose minimum of 10% of our total quantity. This is our total quantity. Our disclosed quantity is 10%, then my total quantity of my total quantity. That means 20,000 I will disclose first. That will get traded. Next 20,000 will come. That will get traded. Next 20,000 will come. That will get traded. Like this, all my 2 lakh share will get traded with 10 trades or 10 lots. But what will happen? I can give 20,000 or 25,000 or 30,000. Okay, I should give minimum 20,000 or higher than the 20,000. Okay. Now, is there any benefit? Is there any benefit? Am I getting some benefit out of it?
Sir, you are not showing your need for the money, or you're not showing how much, how much you actually have to sell.
Yes.
So, like, suppose if the buyer knew, suppose the buyer knew that you want to actually sell 2 crore shares, then he will automatically offer a lower price because he knows that the supply already exceeds the demand.
You are getting benefit definitely because you are not disclosing all your 2 lakhs quantity. You are disclosing part of your total quantity. And is there any cost?
So, cost as in you mean any fees for this?
Not fee. Any other type of losses you will come out with?
I am not sure, sir.
The loss will be the same. Each 20,000 will get different time and different price. Yes or no? If 20,000 get traded, next 20,000 will get another time, another price. Next 20,000 will time price. Okay. So this you will come out with different time, different prices. Only benefit is huge quantity will come, then buyer will lower than that their prices. You are a seller, so you are coming out some amount of benefit here, but you are also bearing some cost over here. Cost means in terms of different time and price. So retailers don't prefer to exercise this because retailers are not punching in this much huge quantity. HNIs and institutional investors, either FII or DII, they prefer for this disclosed quantity. Okay, for us, this disclosed quantity is not that much profitable or that much good. Okay.
Sir, but one question here.
Yeah.
Sir, now these orders, they will get executed as separate orders, right?
Yeah.
So what about the transaction cost and the registration fees and all these additional costs? Are these also calculated separately, or are these all clubbed into just one order of suppose 2 crore shares?
No, transaction cost will come with trade, not with order. We don't charge anything with order.
But sir, there will be no commission and all that, stamp duty and all that.
Not in
where else it is
order.
charged?
Not in order. In trade only. So this trade will have transaction. This trade will have this trade. This total order will not have a transaction cost unless it got traded. Only if we get traded, then only transaction cost will arise. We will also discuss transaction cost. What are the cost we are bearing? But yes, in order, if the order gets cancelled, also we need not pay anything. If it will get traded, then only we will pay. Are you getting?
Yes, sir. Yes.
Okay. Yeah. So we prefer this condition as none, or we don't prefer any quantity condition, whatever. Okay. Now we'll come out with different other types of orders. What is this other types of orders? The base is either price or time or quantity, other types of order. But these are all, you can say, fancy orders or customized orders. One is aftermarket order. What is this? Aftermarket order.
Sir, I'm
What
guessing
is?
it's the kind of order that you place when the market is closed.
Yes, when the market is closed. So what type of orders you can place?
Sir, you can enter into buy or sell agreements. You cannot enter into intraday trades or something, as far as I know.
Uh, yes, what happens? I don't have any time during office hours. I will approach my brokers. Actually, broker opens one window called AMO when market is off. So that's how its name is after market order. Suppose I'll ask, like many brokers opens at the evening 6 to 7. Okay, only holding. Many brokers keep 6 to 8, 6 to 7, 5 to 7. So it depends on broker house to broker house. I will pay some charges for that AMO order, but that order will not go to exchange. That order will with the broker's trading terminal. Broker will punch on behalf of me and uh, to the exchange on the next day when market will open out at 9 o'clock in the pre-open session. Broker will punch that. So this after market order looks like very good. I can punch after market hours, but this is not a preferable order to exercise because you have to bear the charges, as well as you will also bear the next day's price volatility. So today, suppose you have points to buy at 300, next day it becomes say 280 or say 270. Prices are falling to 60 to 50. So this type of risk you have to bear. So nowadays everything is there in our hand, like with our mobile app or our system you can log in. It will not take more than one minute to punch a order. So you can punch orders during market hour. Don't prefer to punch after market hour. Okay. All of you are clear? AMO? All of you are clear? अरे कुछ तो बोलो, कोई नहीं
Yes,
कुछ
sir.
बोल रहा है.
Yes, sir, clear, clear.
Yes, sir.
Yeah. So what will happen after whenever we'll meet somewhere after 2 years or after 1 year? We will not able to recognize. Maybe you will able to recognize me. I will not able to see your face, or I am not able to see you. Okay. So feel or kill means, what does this mean? Feel or kill? What does it mean?
Not sure, sir.
You
We did
feel?
not cover this anywhere.
Yes, sir. So,
Yes.
I never heard about this term. Could you
Sir, I can take
Yeah.
a guess, but I'm not sure.
Yeah. Take a guess. Take a guess. No, not a problem.
Sir, it's like your IOC order, only you want it all to be executed at a particular price.
Yes, you are correct. This is one type of IOC order, but in IOC, partial trading was allowed. Okay, that means part of your order was getting traded. In failure kill, full trade should happen. Full trade means all your quantity should get traded. Suppose say I have punched 300 quantity to buy, all 300 should get traded, then only trade will happen, or else it will kill. It will kill means my order will get cancelled.
No trade.
Clear? No trade. If all the quantity are not getting traded, then it will kill. That is how fill or kill. Fill full the quantity, or kill all the quantity. Okay. Clear? Yes or no?
Yes, sir.
Now, what is
Yes, sir.
all or none? What is all or none? Just say fill or kill and all or none. They both are looking like same.
So all or none is for the quantity. So if you order 1,000 quantity, you want to buy 1,000, otherwise don't buy.
So that is also this fill or kill.
No, fill or kill, you want it at your desired price level. All or none, you are okay to different prices, but you want 1,000 shares. You do not want to have 980 at the end of the day.
No, that is not the difference.
I guess
This
it's
fill or kill is one type of IOC. This all or none is one type of day order. That is the difference between these two. Or else all things are same. All your quantities should get traded, or else trade will not happen. And by 3:30, if all your quantity is not getting traded in one trade, then it will be cancelled at the end of the day. Okay, this is the difference between fill or kill and all or none. Clear? Clear?
Yes, sir,
Yes or
clear.
no? Yeah. Now we'll come out with trailing stops. We have learned what is stop loss. Now what is trailing stop? Have you heard about this trailing stop?
Sir, I've heard of it, but not sure about the concept.
Yeah. So this trailing stop will say in the profit side, my stop loss will trail or it will move up in the profit side. Take one example. Suppose I have bought at 300 rupees and this was my say target and my stop loss was 297. If I'll say the difference between or the trail is 3 rupees, either the trail may be in terms of rupee or in terms of percentage, then my buy price. If I'll say 3 rupees, if the price moves to 315, my trailing stop loss will come to 312. If price moves to 321, my trailing stop will be 318. Okay, this will be my trailing stop. What is the benefit of trailing stop?
Sir, you
What
kind
is
of
the
book your
benefit of?
profits as the price also moves upward.
Yes. So what you are doing over here is whenever prices are moving up, suppose 321, your trailing stop is 32318. In case it starts coming down, you are ensuring to book this 18 rupees profit. That's how trailing stop. And trailing stop loss will only trail in the upside, not in the downside. If we will say this 297, then it will trail to 294, and then it will trail to 291, then the thing is different. Then you will not have any meaning of trailing stop or stop loss. So trailing stop is not allowed in the downside, only in the upside or in the profit side. All of you are clear?
Yes, sir, yes.
Yes, sir.
Okay. Now we'll come out with something called bracket order. What do we mean by bracket order? Whenever we are taking one buy position, in the profit side we are giving our limit sell, in the loss side we are giving our stop loss sell. So we are punching three orders, yes or no? For one order, two different orders again we are punching, so three
Sir,
orders.
only two
If I
orders,
will
no,
tell
sir?
you
One is
two orders means
one will be your buy order, one will be your sell order.
yes, but one will be sell order in the profit side, one in the loss side, another.
Acha, okay, that way.
Two different order you are punching here, and plus this order. This is three orders. Three order form you are filling and you are buying. Now, if I say show you one order buy, another order limit, another stop loss. I'll give you three for or three options in one order form. then that is called bracket order. You need not punch 3 times manually. You punch in one order form. What is your buy price? What is your limit? What is your stop loss? Along with stop loss, trigger price will also be there. Without trigger price, stop loss will not be going. So this is called bracket order. Are you clear? Bracket order is the order at which we can punch all the sides of orders, either buy or sell, again in the limit side or profit side, and again in the loss side or stop loss side. Got it?
Yes, sir.
Then we have cover order. What is this cover order? Cover order only will keep my buy and stop loss. So it will not give my limit, only it will cover the loss, or it will come out with loss, not in the profit side. In bracket order, I was also adding limit. So the difference between bracket and cover order is only the limit price is not there in cover order. Only buy and stop loss. Because many traders' strategies just manage your stop loss. The off side you can exit anytime, whenever you are willing to, but manage your stop loss. Clear?
So, sir, this is basically nothing but a stop loss order itself, right?
Stop loss order, but in one order form you are giving your buy or sell along with stop loss in one order form. If you
Acha.
are
Okay, okay.
manually giving, you are giving separately two order forms.
Got it, got it.
Okay. Then we have something called GTC, good till cancelled. What is this good till cancelled?
Or it gives you a 45-day period for your order to be valid.
Sometimes 90 days, maximum 90 days also. So this option is given by brokers to me to carry forward my order if it is not getting traded today. It can go longer up to 90 days, good till cancelled. So I can means it will be lined up till I cancel, but a broker charges for this. You if you are opting, and you can't go beyond 90 days, that is another thing, but you have to pay some extra amount for this opting for this good till cancel, because every day that will come as a order, but when you are getting to place order from your mobile or from your system, don't opt for GTC. Why should you will pay more? It will hardly take 1-2 minutes to square up all your position, or buy all your position, or punch a fresh limit order before 9 by 9, means 9:15 or 9:20 when market opens up. Okay. Then good till day. Good till day is a day order. It will be lined up till the day. Then one cancels others. What do you mean by one cancel others? If you have bought it, you have given one limit and another stop loss. This is profit and another is loss. If loss is getting hit, then profit will get cancelled automatically. If profit is getting hit, then stop loss will get cancelled automatically. That's how one cancels other. Got it?
Yes, sir.
Yes, I got it.
Now another is BTST. Okay. What is this BTST?
So buy today, sell tomorrow.
So it's a time condition, or GTC, GTD, these are all based on time. Okay. So buy today, sell tomorrow. Why we do this buy today, sell tomorrow?
So it allows you to capitalize on gains which are beyond intraday, but still, like, because the usual delivery system takes 2 days. So if you're so in many cases waiting for 2 days, you might just lose out on that quick gain. So with the BTSG order, you can just literally sell it the other day without getting settlement of the order. So you're actually skipping the settlement part.
Yes. So without getting a settlement, again you earn. Suppose price has moved 3 rupees today. It may happen tomorrow it will again reach 6 rupees off. So you are saying this is rising, so you are holding it for next day to square off. So this is called buy today, sell tomorrow, BTST. Again, some charges are less in BTST as compared to delivery. One is DP charges that will not be applicable since this order will not go to demat account charges. Okay. Now we'll do one price time priority. You have class at 11:30.
Sir, actually, if you could, if it's possible for us to end this class here, because we've been sitting since 7:30 non-stop, and we again have 2 more hours after this also.
Oh, okay.
Would it be possible, sir?
Yeah,
It's
yeah.
a
Okay.
request. Otherwise, we can continue if you wish.
So Saturday, how you are placed like after 11:30? That means you have continuous classes Saturday.
Saturday we are free, sir,
9:30
after
yeah,
11:30.
we have 9:30 to 11:30. After 11:30,
We do not have any classes. Till now, there's nothing. If something comes up, we cannot say.
so can
Sir,
we do
we
one
have
thing?
time slot of 11:30 to 1:30 on Saturday. Then from 2:30 we have classes.
So can we keep Saturday 4 hours instead of Monday? Means it depends on all of you. If you wish to, we'll keep one day only class, that is Saturday,
Sir,
9:30
4
to
hours will become a bit intense. At
Yes,
least I
yeah.
sir.
believe so.
Yes.
And
That
Saturday we
is
have too
Because
many
finance is
classes
heavy, sir.
actually.
Because finance is a
Sir,
bit heavy also,
on
sir.
Saturday also our classes start
yes.
from 7:30 only.
Oh, 7:30 is something is okay. Actually, earlier days when we were having this Gurukul, na? So they do yearly classes in the Vedic society. So early morning classes are good. You can remember many things. But yes, but it will still continue till 11 o'clock. You have to just put your patience. Okay. How about just allow me to take attendance? I got the attendance sheet. Uh, just allow me. Okay, Akash, let me share the screen. So just 2 minutes, we'll finish it up. Akash, are you present? Akash Singh. Anchal. Anchal. Ayush. Ayush is present. Ayush, I have seen Ayush. Okay.
So
Adhyasa.
Ayush was in the class, but I don't know.
Yeah, Ayush was there. Adhyasa. Uh, Tejas. Ali Sagar.
Sir, it's
Ali
Ali
Sagar.
Asgar and I'm present, sir.
Okay. Anjali. Anjali Garg. Amul Sen.
Present, sir.
Arismita. Arismita. Avani. Ayushi. Ayushi. Sarvesh Ramesh. Bhavya. Teddy Chabra. Diksha. Diksha was present. Dipansa.
Present, sir.
Dipansa. Gaurav,
Present, sir.
Kadam, Gaurav, Santosh,
Present, sir.
Himanshi,
Present, sir.
Jaideep,
Present, sir. Present.
Ayushi, Ayushi, then Krishan, Krishnakant, Kriti,
Present, sir.
Mansi,
Present, sir.
Mansimaran, Manvi,
Yes, sir.
Mihir, Muskan,
Present, sir.
Namrata, Neil,
Present, sir. Sir, Namrata is present.
okay, Neil is present. Nikhil, Prasun,
Sir,
Pratik,
Prasuna present, sir.
okay, Pratik, Rachit, Tyagi, Rahul Ghosh,
Present, sir.
Rahul Giri,
Present, sir.
Rahul Goswami,
Present, sir.
Rajaditya. What is that?
Yes, sir.
What's your name? Rajaditya.
Sir, Rajyaditya.
Rajaditya. Okay. Very good name. Rasi,
Present, sir.
Rishav, Roma Kesari, Sahaz, Samiksha,
Present, sir.
Saranya,
Present, sir.
Subham Kumar,
Present,
one
sir.
Subham is present. Subham Jain, Subham Kumar, both are present? Both are present or one is present?
So Shubham Jain is present.
Subham Kumar, Someshwar, Stuti, Sanika Thakur,
Present, sir.
and Binay Power. Okay, thank you all.
Thank you so much, sir.
Welcome.
Thank you, sir.
Welcome.